Hello, traders, and welcome back to another day trading with the VIP team. Today we're talking about U.S. equities, and the reason we're talking about U.S. equities is because of yesterday's sell-off and price eventually just erasing all of those losses in a late New York session. But before we go any further, if you are not subscribed to this channel, please do subscribe. It's free, and that helps us out a ton, reaching new traders. Also, if you want to get my VIP trades on this market in particular, just subscribe to the link below this video to the VIP group. Now, don't skip ahead, but I am going to tell you my zones where I'm looking for either buys or sells in this market. And also, I'm going live pre or at the New York Open, so heads up to that because I might be actually taking that trade live. So what I'm talking about here is the Dow Jones, and the Dow Jones Industrial Average has printed two big levels on the daily. Top right of my chart, people. The first of all is the 3600 level, 36,000 level, and the second one, which has been already broken with, is this previous top right here around the 3550, 35,500 level. So this entire day zone on the daily should be my no trade zone right now. And as you can see, that pretty awful candle for shorts printed is printed at the moment. Now I'm going to focus my analysis on the 4-hour chart. And yes, I'm going to tell you what I'm looking at. I'm looking at a monthly ranges here. Yesterday, what we had here was a clear fakie on the monthly range. This is why I'm looking at shorts on the Dow Jones. Perfectly zoned shorts for the New York Open on Dow Jones, people. Why? If we look, we are trading in a range on the Dow Jones Industrial Average for the past, I don't know, 3 months. This is October lows, this is November lows, and this is December lows. This is why it's important to have the high and the lows on each or on your charts, and that's why I have it in yellow to be able to visualize it, right? So basically, we are topping down around this zone on the Dow Jones, and we are topping up around this zone on the Dow Jones again. And yesterday's price action, or last week's, I'm sorry, price action, um, right here conflicts with the overall run bull thesis. Why? Because this is just a fakie out of our trading zone. Again, it is just a fakie, a complete and massive bull trap in this market. Now, I know that I'm looking for shorts, and the reason that I'm looking for shorts is this. And don't skip ahead, but I am going to tell you how my shorts are going to get invalidated also. So basically, after faking out of the 36,700 level, right, and printing what seems to be new all-time highs, I believe. Sure it is new all-time highs. The Dow Jones Industrial Average just crashed and broke with the previous lows, creating a new weekly low. Now, right now we are retesting said weekly low or last week's lows, and this 4-hour candle, yes, seems to be a little bit bullish, but hear me out. This entire zone right here is my preferred short zone. Why is that? Now let me get rid of this line. I am looking at a very interesting pivotal level on the Dow Jones. Right now there is absolutely no setup to go short on the Dow Jones. And this is by no means financial advice. That is what I'm looking at on the chart, and I'm looking at a massive break of those lows. Bulls just getting trapped again. Momentum bulls got trapped at the break of the previous highs or December highs, and then deep buy bulls got trapped at the retest of the previous broken lows. So this is a double bull trap that I'm looking at this market, which is a double whammy in the sense that we are looking now for shorts at the retest of the previous broken lows. Now, if we go to the lower time frames, let's go to the hourly time frames just to look for entries. We were looking at, actually, let me just go ahead and put on a line on all of my charts so I don't have to redraw everything again and again and again. right? Right here is the hourly chart and those entries that I'm looking at. As you can see, perfectly confluences with what I'm telling you. On the hourly chart, we have seen 1, 2, 3, 4, 5 days worth of bearish price action in the Dow Jones, and people keep buying in on the dip. Now that this reversal structure was not validated, I am looking for shorts and shorts only. Now, where am I going to look for shorts? That is for price to still determine, but I do have a perfect entry on the short side. I need for price to develop a little bit more to the upside, maybe to give me a better entry. But if price breaks with the weekly pivot, that my short idea will be invalidated. So basically, this is my short zone, right? January 7th was, let's have a look. January 7th was Friday's highs. This is Friday's highs, right? If price breaks with Friday's highs, my short idea is invalidated. Why? Because it will be breaking with the overall bearish structure that we are looking at here. Also, we will be trading above the weekly pivot. That is a red flag for me. But if price completes a turn higher, we will get a better risk to reward ratio. Again, if you want this trade in particular, just heads up to the VIP team and subscribe with the link below.